it's now time to move to our first segment presentation. We'll have 3 operational companies talking about their plans. First Germany, then Europe, then T-Mobile. So we start with Germany, Srini Gopalan, and he will come with his head of consumer, Wolfgang Metze, who will talk, of course, about our B2C activities. So the team have delivered 31 consecutive quarters of EBITDA growth now. Q3 results are, of course, a secret, so we don't know what's going to happen then. But they've turned customers into fans. They have invested in fiber while increasing the ROCE. So good stuff. Let's see how they will continue this. Srini and Wolfgang, please come on stage.
Hi. Thank you. Thank you. Good afternoon. It's a real pleasure to be doing this presentation, not just because it's in front of such a good-looking audience, but more importantly, I get to speak in English for the next 45 minutes, which has not been the story of my life for the last 4 years. But I'm delighted to talk to you today about Telekom Deutschland. Starting with our performance to date, as all of you are aware, we've had an extremely strong performance between the period 2020 to 2023. But I want to highlight one thing that makes it special for me more than anything else. And it's this whole line of no trade-offs. We haven't made a trade-off between delivering in the short term and building the future. Our ROCE, which was about in the zip code of 5%, today is in the zip code of 8%, which is significantly higher than our WACC, which means we've created economic value every year. And at the same point, we've built more than 10 million homes of fiber, or will have built more than 10 million homes of fiber by the end of 24. I think there's no debate that a business with fiber rather than copper has higher terminal value. So we've achieved something reasonably unique for a telco, and I'm sure all of you are used to arguments with telcos which largely involve a trade-off between I can give you cash tomorrow or I can build the infrastructure for day after tomorrow. What we've done is straddle the two things of creating value, driving ROCE higher than our weighted average cost of capital, and at the same time, driven terminal value of the business with fiber. That's the thing that makes me most proud of our performance. And jumping straight to the future, that is the core of our promise for the next period as well. There are no trade-offs at Telekom Deutschland. I'll run quickly through the key highlights of our performance. Really happy with the way revenue's gone. Mobile service revenue and broadband ahead of the top end of our predictions, and clearly gaining share. EBITDA above our guidance, and CapEx at 500 million, pretty much bang on where we said it would be. All of this powering this ability to do two things at the same time. ROCE going from 5 to 8, at the same time building 10 million homes. The reason the fiber number is an amber is, in all honesty, we'd said 10 million homes without Glasfaser Plus. We will build about 9.5 million homes without Glasfaser Plus. Including Glasfaser Plus, that would take us to order of magnitude 10.3 million homes. So we've done both those things. Again, in the spirit of radical transparency, have we delivered on each one of our key metrics? No, we've missed on a couple. Cost being the most significant, given the Russian war and everything that happened and the inflation around it. We finished up in a place where we delivered a 500 basis points improvement in our IDC as percentage sales. That was about 300 million euros, which was less than the 700 million. We made progress, but a lot of that got eaten away by the spike in inflation. The other place which has been a disappointment is B2B. Now, some of you might look at this and go, 1.4% revenue growth, a percentage growth in profitability, CAGR, doesn't look that bad when we compare ourselves to some of our European peers, but good is not leading. We are disappointed by this more because we believe there was a significantly bigger opportunity. And Klaus and I will dwell a little more on this, on the size of the opportunity, why we believe we should not be satisfied with this performance, why we believe there is more possible. Now, that's a lot of the numbers. And we're often by you described as a strong performing or the strongest performing incumbent. I particularly dislike the word incumbent. It got used earlier today as well. So much so that I went up and looked at the roots of the word incumbent. The Latin root of the word incumbent is to sleep or lie on something to protect it. Do we look like the kind of people who are sleeping and lying on something to protect it? Right? That's the reason the word does wind me up. But let me try and give you a picture of why I don't see Telekom Deutschland as an incumbent, and what I believe truly drives the engine room, what creates these results that you're seeing. The first part of what drives this is our brand. Uli will talk a lot more about this. But look, the brand today is the most valuable brand in Europe, the most valuable German brand, and that includes brands like Mercedes. You don't get there by being an incumbent. We've gotten there because we've been able to capture the zeitgeist. We've been able to capture what society cares about, like our campaign against hate speech. And we're able to tell that story in an edgy manner. Not a safe, not a neutral manner, but a manner that cuts through the clutter. Combine that with the delivery of quality, and what you have is truly something special. A brand that speaks to society, that speaks to it in a tone that cuts through, and accompanies that with quality delivery. That makes a huge difference to who we are. The second piece, and everyone says this, people. But let me share a story. Like a lot of you, I had my misconceptions on day one at Telekom Deutschland. I thought, where am I now? I've got this large group of unionized workforce. I'm sure they're clock watching. I'm sure this is going to be hard, and efficiency is going to be hard. And then the gentleman on that screen, Terence, changed my view of Telekom Deutschland forever. So Terence is our field technical agent. My first day at Telekom Deutschland, I spent with him. We started at 8, worked through till 5 o'clock. It was a Friday. That point, it was all very efficient. It was very German. And at 5 o'clock, I was expecting him to say, okay, we're done. We went to our last call. Lovely old lady, 70 years old, runs a little shop in Bad Godesberg, not far from here. Right? We fixed her telecom issue really quickly, but then she was nearly in tears. Had a conversation with her, why? Saturday was her next day. 60% of her business was on Saturday, and her credit card machine was broken. Terence then spent the next 2.5 hours, and I kid you not, 7:30 on a Friday evening, going to various internet fora to figure out how to solve her problem. And he did. That is the spirit, that is the essence of our frontline. Turning customers into fans, one customer at a time. That's the reason I'm proud to lead this company. And the number that blows my mind away, that I'm extremely proud of, is 91% of people in my company perceive their work as meaningful. That doesn't mean they're satisfied, they're engaged, they're happy, etc., etc. They find purpose in their work. That is a rare, rare thing. And that's why I truly believe a big part of our secret sauce is our people. And that's not all. You've got a unique brand, unique people, and there's something about how we go to market. Look, again, if you go back to sleeping on something to protect it, we've got lots of market share, right? One attitude of an incumbent is to say, let's sleep on it and let's protect it. Let's make sure we have enough sleepers in our customers. Let's not reprice the base, right? Our attitude is different. We absolutely respect market structure, but we believe if we truly focus on customers, there are enough underrepresented segments, there are enough places where customer needs are unmet for us to still grow ahead of the market. I'll give you a couple of examples. Kongstar. There's a big need in the mobile market for a brand that's seen as fair, not necessarily cheap. Kongstar has nailed that niche and is today a scale brand. Give you another example, Magenta TV. With a plethora of streaming services, customers are looking for a simple aggregator. Magenta TV has filled that need, which is why it's one of our fastest growing categories right now. The family plans, but I won't steal Wolfgang's thunder. I'll let him talk you through the story of family plans. Now, it's this combination of things. Our brand, the uniqueness of having the zeitgeist, communicating in an edgy manner, our people and their purpose, and our go-to-market, which is respect market structure, but still expect to grow. All of that put together is what makes us special. And in fact, if I was American, I'd probably call ourselves the unincumbent. So that's the story of the machine that has really helped deliver. I'm not going to spend any time on this. You guys have already seen the numbers, really strong delivery in the last period. Let me move on to talk about 2023 to 2027. Now, Tim's already talked about our flywheel. Investments driving customers, which in turn drives efficiency, which in turn drives financials. I'm going to focus on why I passionately believe data and AI can accelerate this. Now, there's a lot of talk of AI. The reality at Telekom Deutschland is we have 500 projects running today which aim to take our processes and make them better. Better for the sake of the customer, better for the sake of our people, and better for the sake of efficiencies. These are not pilots. They're no longer pilots. These are actually scale rollouts. And these are attacking at least 500 different processes. Let me give you an example. And no presentation of mine is complete without a long German word. So I'm going to give you the example of something called the APL process, which is the Anschlusspunkt Linientechnik process. Now, where does this process kick in? Right? Now, this process, to date, till about 6 months ago, wasn't digitized. Where does this kick in? Now, when we roll out fiber, there's a lot of customers who buy at the same point we roll out through the pre-marketing. But obviously, there's a fairly large number, already it's about 5,000 a month, who 6 months later put up their hand and say, I'd like to have fiber. So you need to go connect that individual house. Now comes the joy of building fiber in Germany. When you connect that individual house, what you need to do is 3 things. Make sure you've got the landlord's permission. Make sure that you've contacted the right subcontractor to roll out. And then the third one, which is another lovely long German word, make sure you've got the Genehmigung, which is the permission from the municipality to allow you to roll out. Now, those 3 things, again, seem simple. But if you look at the plethora of systems that we have today, this is what happens. An agent has to copy-paste data from one system to another, transfer that across, then go check who the subcontractor is, then go across and check if the landlord permission is there, then move across and check if there are permissions. This is obviously a fast-forwarded version of this. That takes 3 minutes, 34 seconds today. And I've taken a simple case where in this case, the permission to roll out actually already existed. If that didn't exist, the agent would need to fill a minimum of 6 more forms. Now, what we've done in the last 4 years, and AI doesn't happen overnight. You don't suddenly get ChatGPT and build a model. What we've done in the last 4 years is opened out the APIs to all our legacy systems. We've moved all of our data to one single place, which allows now this process to be automated. But that's taken 4 years of blood, sweat, and tears, opening out APIs on all the legacy systems, pulling all the data together. And now we can take this process and make it a single-click process, where all the agent does is picks the customer and the address, everything else is automated, and we're done. Now, that is the comparison. 3 minutes, 34 seconds, 9 seconds. Now, the reality, this is not fiction. This is not science fiction. This is now live. 100% of our 5,000 orders every month are now processed with a new way. This is why I'm incredibly passionate that AI will change the world. AI and data will change the way we work forever. And this is not just AI, it's also robotic process automation. It's a bunch of digitization tools. I don't care what tool it is, as long as it lands up giving us that output. So if you look at what this has done, what it's taken to get here, this hasn't happened overnight. It's been a 4-year effort across Europe, across our EU, NatCos, as well as Germany, to move data to one place, to open up APIs, to make our legacy systems digitizable. That's the heart of why I'm convinced that this stuff will accelerate our journey. Let me get back to the flywheel now. We started with investment at the top of the flywheel, and that flywheel gets accelerated by AI and data. So I'll go back to the top of the flywheel and investment. Obviously, our biggest single source of investment is fiber. Now, we've been at a run rate of 2.5 million fiber homes per year, and we will hold that run rate. That run rate gives us about 2/3 to 70% infrastructure share of all the fiber that's being built in Germany. Now, what will 2.5 million give us in the next 4 years? It depends a bit on the altnets, and to some extent, given all the press, you all know how much trouble they're in. But our commitment is to continue driving 2.5 million homes. I know there were a couple of analyst reports about inflation on the back of some commentary, et cetera, et cetera. We had inflation in 23. Now, we were more protected because of our scale and long-term contracts. But what we're seeing now is some easing off of those trends, and happy to talk about it in more detail. From a CapEx perspective, what we're assuming is a 20% CapEx to sales ratio. Christian tomorrow will put that together to what it means for ex-US CapEx as a whole. But this is a fundamental commitment to building out fiber in Germany. And I know there were some questions on can we go faster, can we go slower? Happy to pick that up when we get into Q&A again. But fiber is one significant leg of our infrastructure. It's not the only one. Our mobile network, clearly the best mobile network in Germany by any metric, call drop, data throughput, whatever you want to look at. But we won't stop. We are in the process of overhauling our entire network. We have 36,000 sites. By 27, we'll have 40,000 sites. We will build Germany's first ultra capacity network in the next period. What does that mean? Why do I call it ultra capacity? It starts with our ability to use frequencies. Now, thanks to the big upgrade we've seen in radio and antenna technology, we can now use low band, wideband, and mid-band and wideband, mid-band. What does that mean? Historically, if you wanted 700, 800, 900 in one site, you needed more than one antenna because you didn't have the radio technology to make it happen. Now we can bring 700, 800, 900 onto one site. We can bring 1500, 1800, and 2100 megahertz onto one site. What does all of that mean? Historically, between 10 to 20% of our sites had all three low bands. Historically, between 10 to 20% of our sites had all three mid bands. By the time we're done with this, 100% of our sites will have all the low band, 90% of our sites will have all the mid band, and we will use 3.x where needed in traffic hotspots. It's not just that. Backhaul, especially in a data-intensive world, is a big deal. Today, 80% of our sites are fiberized, about 50% of them with more than 10 Gbps. When we're done with this little thing here, 85% of our sites will have more than 10 Gbps. In addition to that, obviously, all of this will be 5G spectrum, which will migrate with time depending on devices. What does all of that mean for the customer? What do I mean by ultra capacity? We will double the capacity of our network. And that's a huge deal. 90% of our sites will be capable of greater than 1 Gbps download. Our indoor experience will obviously improve because you'll have 700, 800, 900 in all your sites. So you'll see shift right on your indoor experience. And we understand that the experience is critical to customers not only where they work and or stay, but also where they travel. So we will add 400 sites onto the Autobahn. We will improve our coverage on Deutsche Bahn, working with them. All of that together is what will give us the ultra capacity network. So from an infrastructure perspective, big investments, continued investments in fiber, continuing to drive our mobile network to get true leadership in Germany. Now, that's the infrastructure story. I'll hand it over now to Wolfgang to talk about how we monetize all of this with customers. Wolfgang.
Thank you, Srini, and good afternoon. I would say let's directly jump into the B2C business, and I will drive you through all 5 segments of that business. But let me first start with our philosophy, how we convert the investments Srini showed you into customer and revenue growth with a combined profitability. Our philosophy is clear, and we have heard that many times today. We turn customer into fans. And this is not a happy, clappy mindset, what we are talking about, or just like a buzzword. It's our daily business. especially when it comes to decisions, and more important, when it comes to execution. It's a very much data-based approach because we measure everything in detail, and then based on that data, we drive our KPIs rigorously. Every action we take is based on that philosophy. We focus really on the needs of our customers, and this is paying off because you can see on the slide that satisfied customers in Germany spend 9% more and they stay longer with us. We see a churn reduction up to 50% in that segment. So that means customer delight is a key driver for our insight-driven growth and a great financial investment. Then let me give you and show you two examples how we do that, how we turn customer into fans. And I brought the loyalty program Tim mentioned many times, Magenta Moments, with me. Because we engage through our app, through our loyalty program, Magenta Moments, very deep with our customers, and that leads to 4 times higher NPS. The other example I brought is our personalized data snacks, what we give to our mobile customers every month. What you can see here also is it leads to a twice as high NPS. And the good news also is it increased our app penetration and also our digital sales and service contacts. So that means we are the first choice when it comes to cross and upselling opportunities. And I want to show you more about that one. Having talked about the philosophy, let's now talk about the broadband business. Let me start first with the market. And you can see on the slide, the reality is Germany has a significant growth potential. We see a hunger for bandwidth in nearly all countries around us. I give you 2 examples. As you can see, Germany has today the same data consumption than France, Spain, and the UK has 4 years ago. If we look at devices, we see nearly the same picture because the average device per household in France and Spain is in Germany is today lower compared to 4 years ago in Spain and France. So what does that mean for us? For us, it means a great opportunity to grow for the next years. And that hunger for bandwidth, combined with our ability to upsell our customer base, together with our fiber rollout, will lead us to a broadband revenue growth of 3 to 4% during the next 4 years. And this growth is based on 2 factors. The first factor is volume, and the second factor is, of course, value. Let me start with volume. You can see here on the slide that we have grown our broadband customer base between 2020 and 2023 by around 1 million net adds. But we won't stop. We will grow further our customer base with a net add share of above 40% every year. The second factor is, of course, value. And you can see on the slide, we have proved in the last years that we are able to continuously upsell our customer base, and this has led to an ARPU increase from 33.5 euros above 36 euros. By the way, using European standards, this is still quite low. And with our growing fiber rollout of around 2.5 million homes passed every year, we are able to constantly upsell our customer base to a bandwidth of 1 gig and above. As you can see, fiber is a very important step and a very important piece in our strategy. Let me give you some more insights how we will manage our fiber business here. I will show you now how we will substantially scale our fiber net adds to around 1 million fiber net adds in 2027. The truth is, in Germany, fiber is a very complex business. Fiber is a long-term business, and by the way, fiber is a really regional business. The truth is also, fiber is today, fiber is now. And there are two factors from my perspective, what is needed to build fiber in Germany. The first thing is, and Srini has mentioned that already, we need scaling the permissions to build, especially in the MDU segment, the segment of multi-dwelling units. It's a key success factor. And we have already gotten more than 5 million, the permission to deploy for more than 5 million homes in that segment. And on top, we have signed an agreement with the Federal Association of German Housing and Real Estate Companies. And based on that, we are able to scale. The second factor is, and I mentioned that, fiber in Germany is a regional business. And we have an organization at Deutsche Telekom that can handle the specifics of each area in Germany effectively and efficiently. If you ask me, we are the only operator in Germany I see that has a regional structure. We are operating our fiber business in 5 regions with 35 regional teams and local teams. Thousands of colleagues are running regional projects every single day to build fiber and bring fiber to our customers. And honestly, it was not easy and it took us a while to build that machinery. But now our machinery is oiled and running, and we will see that we deliver this year around 450,000 new fiber net adds. And this is almost doubling our fiber customer base if you compare that with the beginning of 2023. Selling fiber needs a great portfolio, and we have introduced a new portfolio in July this year. And with this portfolio, we simplified and we differentiated. What does that mean? The customers on our new fiber infrastructure feel the better experience with this portfolio from day one onwards. And with that, we have laid the foundation for our customers to actively choose our fiber product. We win with that new customers, and we migrate our VDSL customers and upsell the customers to our fiber products. This is very important for us to deliver our broadband revenue growth of 3 to 4% during the next 4 years. Having talked about fiber, I would now talk about TV. And TV is a business what we will grow, and we are confident to grow by 20% until 2027. The question is, why are we so confident? And why is this so important for our strategy? The answer is, we picked that segment because we are underrepresented and we have a clear right to win. With 13% market share, we are the attacker in Germany in that segment. We are using the trust in our brand, our world-class sales and service force, and our digital skills to scale. And the customer really loves it. You can see it on the slide. The NPS of the TV customers is 25. But we won't stop. We are never satisfied. Therefore, we introduced this year a new TV platform with world-class new features. And can you imagine? The NPS on this platform with our customers is above 30. That means we are playing here in the league of OTT players. And it's no matter if you watch TV through broadband at home or while watching it on the go, we are our best 5G network. It's always the same experience. Moving from TV to 5G. Srini has already mentioned that we in Germany have the only outstanding network. And thanks to Abdu and his technology team, we have a great advantage here. And I will tell you now how we will turn this advantage into further growth. With our family plans, we have eliminated the trade-off between value and network quality for German families. That means there is no reason anymore for any family member in Germany not to use the best 5G network. With just a few clicks, you can add a new family member via the app purely digital to the family plan. And with that, you can see on the slide, we are winning big shares from the MVNOs, and this is a great success. Let me zoom more into the numbers and into the financial impact of this strategy. Since we have launched this proposition, we have increased our family cards by plus 150%. The mobile number portability share increased from 6% in 2021 to 35% this year. That means in a highly competitive market, we are able to win big shares from the MVNOs, as you can see on the slide. And what you also can see is, and we are proud to say that, we are the incumbent on our way to have an OTT-like NPS. The good news is there is still a long runway ahead for us. Currently, we have only 27% penetration of family cards within our customer base. And Tim already mentioned that Telekom is for everyone in Germany. And therefore, we have a clear multi-brand strategy. In order to maximize our growth, we have a clear positioning of our brands Magenta, Congstar, and Frank. And Frank, for example, we launched Frank as a purely digital brand for the segment of discount shoppers. The customer can only use it digital and buy it digital. And Congstar, our biggest sub-brand, is well positioned and very successful in the segment of smart shoppers. And at Gamescom this year, we decided to launch Congstar at Home to increase the broadband penetration also in that segment. What you also can see is on the last topic on the maps, that we have regional imbalances. What does that mean? We are leading, we have the best network, but there are areas where we have a SIM share below 20%. I cannot accept that anymore. Therefore, we took and take clear action, and we analyze, we correlate customer data with the network data and with our NPS data. And this is the fundament and the basis for an intense discussion with every individual region. Then we add the sales structure, the sales channel structure in that area on top. We look at the competitive landscape, and then we create measures to better respond to the customer needs in all that areas to improve our net add share above 20%. And the outcome is very promising. After implementing that in some regions, we see a sales uptake of about 22% in main cards in the regions where we started using that approach compared to the regions where we haven't started yet. To sum it up, with our multi-brand strategy and our scalable regional approach, we will grow our service revenues by 2 to 2.5% until 2027. And of course, we will strengthen our lead further. So from my perspective and our perspective, we are very successful in our core business. But as Tim also mentioned, we will build new revenue pools, and we will also on top grow beyond core. And for us, it's really a great opportunity to engage deeper with our customers and also to engage deeper with our partners and using our partner ecosystem to create a better bonding for our long-term financial success. Whether it's personalized TV advertising or using the strengths of our app gateway, Magenta Moments, we will grow beyond core. We are still in the early stages, but we have already had over 6 million active users and more than 22 million engagements with that strategy. So that means we are on the road to monetize and to grow. You will hear more from Magenta Moments and all this from Dominic and Melinda later on stage. Let me wrap up my presentation here and let me give you my 5 main key takeaways. Number 1, with the growing hunger for bandwidth and our ability to upsell our customer base, we will grow our broadband revenues by 3 to 4%. Number 2, fiber is a very complex business in Germany, but we have built our machinery to scale fiber to around 1 million new fiber net adds in 2027. Number 3, we have eliminated the trade-off between value and network quality for German families, and we have a clear multi-brand strategy to grow our service revenues by 2 to 2.5%. TV is an important piece in our strategy and key to emotionalize our best infrastructures, and we are the attacker in the TV market, and we will grow by 20% until 2027. And number 5, last but not least, we will grow beyond core, and this is the cherry on top. I will end my presentation like I began it, with our philosophy. Our customers are our obsession. We will turn customer into fans. And with our leading mindset, we will be the incumbent with an OTT-like NPS. And with that, I will hand over back to Srini. Thank you very much. See you later in the Q&A.
Thank you, Wolfgang, for that passionate deep dive into B2C. I'll kick on with B2B. I said earlier that I wasn't happy with our B2B performance, and this is our opportunity to set that right, not just on revenues, but also on margins. 5 reasons to believe our B2B revenue growth story, and Klaus will talk a lot more about this tomorrow. Number 1, underrepresented segments, public. We have high shares at the federal level, but our shares at the municipality level are low. Underrepresented segment 2, we're very strong with connectivity in the Mittelstand, but in the enterprise segment, because we fell behind on SD1, our shares are 20 to 30%. So you take the top 4,000 enterprises in Germany, and our fixed line shares are 20 to 30%, which is just not good enough given the infrastructure we have. On the Mittelstand, there's a big opportunity here for us to work with them to digitize them. A large number of them really haven't digitized as yet. Number 4, in the small SOHO businesses, our fiber, truth be told, has been very focused on homes, on consumers. Big opportunity here to drive fiber there. And last but not least, we've got a collection of businesses which are all showing double-digit growth that we call T-Digital. This is IoT, cybersecurity, especially network security, and our Mittelstand systems integrator. All of that will drive our growth to the 2% ballpark on service revenue. But it's not just service revenue growth. There's also a big margin opportunity in B2B, which will come from a restructuring of our go-to-market, which Klaus will talk about tomorrow, as well as our delivery, which is complex, and the new technology gives us a great ability to streamline that, but also changing our product mix. And again, this is not jam tomorrow. Just in 2024, we will see close to a 50 million improvement by changing our product mix and focusing on higher margin products, which is why our commitment is to grow our profitability in B2B ahead of our revenue growth. It's just coming back to the flywheel. We've talked investments, we've talked customers. I'm going to move on to talk about efficiency. Now, in the period that we're staring into, there's one big difference from a cost perspective. We are in a tariff agreement, which is more on the 3.5% to 4% per year tariff increase, versus in the old world, which is more 2 to 2.5%. So we do have a headwind. But we will commit to a very similar level of efficiency. We are saying we will have a greater than 4% improvement in our efficiency ratio, which is our IDC as percentage sales. Where does that come from? A big part of that is we really believe that we're ready to make the jump into digitizing our processes across sales and service and in technology. And we believe we will see a gross efficiency of 20 to 30% on the overall cost base in sales and service and technology by deploying these. And it's not that we're deploying these in 2026. A large number of them have already been deployed, There's a large stream of projects which will go live in the next 12 months, and that's because we've done the hard yards. We've done the hard yards of getting our APIs open. We've done the hard yards of moving all the data to one place. Let me dive a little deeper into sales and service. The core of our strategy is prevent, automate, enhance. Prevent, that's pretty obvious. No one calls a telco to have a cozy chat, right? You call because you have a problem. And how do we prevent those problems from happening? How do we proactively reach out to customers? Automate, again, something we've done for a while, but the new tools give us all sorts of options. For example, using WhatsApp naturally as a natural language chat feature. But the thing I want to talk about a bit is when someone does speak to us, how do we enhance the agent and customer experience? And I think Akhil and Tim had an interaction earlier. I can look at this and go, this looks like most telcos. Takes us about 480 seconds to handle a call, and then post the call, it takes another 300 seconds to wrap it up. That slide there on the right-hand side is what we call the anatomy of a call, right? Now, you look at it another way around and say, that's just ridiculous in 2024. 60 seconds of our time goes to find out who you are, right? Then we have 390 seconds to process your issue. What does that mean? You call and say, I have a problem with my router. I ask you for the router number. Then I go search up in my 19 different systems. Where do I get the manual for this router? That comes up. Then I go search up and try and find out what I'm troubleshooting. Now, that's how calls work today. And then after all that, I have to document it and take whatever action. If you've changed address, then I need to send you a change of address form. Now, that is very, very old-fashioned. Our new technology and the fact that we have APIs and the fact that we have data in one place, and Jonathan Abramson will show you a couple of fascinating videos about this tomorrow, gives us the opportunity to change this. By the end of 24, we will have 100% automated welcome and identification. That's 60 seconds off this. As we go through 25, we're using natural language search, we're using LLMs, which actually give the agent on screen the router modem, the modem that they were looking for, and the manual, as well as the specific question, real time as you're talking to the customer. And this is not science fiction. We'll see this rolled out in our estate in 25. And then documentation, that's the easiest thing to automate. Now you pull all of this together, there is a huge opportunity, not just for cost efficiency, but for a significantly better customer experience and a significantly better agent experience. And all of this is possible because we've trained for this for the last 4 years. You can't run a marathon without training. You can't you can't build AI and data and use it as a turbocharger without the APIs and the data. And we're in the fortunate position of having built that. In technology, I talked a lot about the APL process, but there's more to that we can automate. We've got T-cars driving around Germany, which will automate our planning and scheduling. One of the biggest things we do is we use subcontractors to do construction of fiber. Today, we have to take random samples to go check if the construction was proper, and sometimes we also have to know what the construction was like to pay them. Tomorrow, and in fact, this is done for 60% of Germany today already, Abdu. You have people, the subcontractor has to take a smartphone, video what they finished building, upload it. We've got AI tools which check it, automatically generate the bill, but also say, here are the faults which someone can check. Again, this will make a massive difference to our customer experience and our agent experience, and of course, drive efficiency. Now, none of the flywheel is complete without talking about sustainability, and we have a predictable view on sustainability. There are no trade-offs here either. We believe we can run a better and a more profitable business when we truly invest in sustainability, whether that's in terms of improving our energy efficiency, whether that's in terms of driving greater circularity, or that's in terms of, with our brand, truly engaging from a social perspective. We see no trade-offs here. We haven't in the past, we don't in the future, and we will continue driving this forward. So let me pull this together then in terms of what the total picture looks like. So the total picture, 2.5% to 3% EBITDA growth, which is exactly what our guidance was last time. Service revenue of 2 to 2.5, which is slightly higher than where it was. An IDC efficiency very similar to last time of greater than 4%. a ROCE increase upwards from 8%, which we're already at, and 2.5 million fiber homes a year, with the service revenue growth being driven by growth in share across the categories we're in. And all of that continues our no trade-off story. Our ROCE will be strongly higher than WACC. We will create economic value every year. And at the same point in time, we will have built 2.5 million homes a year, driving up our terminal value. I want to just pause for a second and pull right back, right? Because we can get into these different isolated periods. You take the period 2020 to 2027. In that period, Telekom Deutschland will double its ROCE and will move from hardly any fiber to close to 40% of the country being fiberized. There are no trade-offs at the unincumbent. Thank you.
Excellent. Thank you very much, and very confidence-inspiring, at least to me. So now we have... Well, I'm a former financial analyst like those guys. So we take some that haven't had a chance yet. So Andrew, please.
Yeah, thank you. It's Andrew Lee from Goldman Sachs. I guess telco investors have a hard time believing it will be different this time, you know, a healthy skepticism. So I just wanted to draw or pull out on two things that you've talked about within the flywheel, and it pertains to Germany, it could equally pertain to the rest of the group. So one of them is B2B growth. Right? So in the past, we haven't seen the growth that you're guiding to, and the reason for that has been competitors with low marginal cost, and the growth area has been low margin. So what's different this time that means you can really grow B2B? And then the second question is just on efficiencies. Same thing, really. We've seen efficiencies in the past, but telcos have never really held on to the benefit because everyone has delivered those efficiencies. So what's going to see Deutsche Telekom actually hold on to those efficiencies within the margin?
Okay, so two things. On B2B, why believe it this time? So I think a couple of reasons, right? You know, I showed you that our enterprise share had gone down substantially. One of the reasons our enterprise share had gone down substantially is I do think we behaved like an incumbent defending NPLS. I do think what we did was we slept on past successes, which is why our enterprise share eroded from the high 50s to the 20s. The good news is we are the challenger right now. The incumbents actually are a bunch of other people who are sitting on the SD-WAN product that they moved to. We have very little margin to lose right now. That is structurally very different from the place we were in, which is, you know, should I fish or cut bait, right? And stuck in the middle and not managing our way through our MPLS migration well. Right now, what was bad news in the last period turns out to be good news now. We've got an SD-WAN product, we've got a flexible product which works. We can scale and drive that. The other piece, and so this comes back to this underrepresented segments thing. I think the second piece is we've got a new leadership team in which truly believes in setting the right incentive structure, and that's a net margin or a margin-based incentive structure versus a gross sales incentive structure. And I've already seen the result of that in 24. Right? We've seen something like 50 million additional margin purely with that happening. So a combination of moving from incumbent to challenger, which can be a blessing in disguise once it's done, and the fact that you have a leadership team now which is very focused on driving margin. One of the reasons, one of the big problems with this gross sales view of the world is then you compensate high telco margin with low ICT margin, right? Which doesn't work if the core of what you are is a telco. So it's been a painful journey. That's why I'm unsatisfied with where we are, but we've got the ingredients to change that. On efficiencies, I'd beg to differ on, you know, this has been a story of eroding efficiencies. Look, Telekom Deutschland 2016 to 2020 grew EBITDA by 1.5% a year. All of it was efficiency. 2020 to 2024 grew EBITDA 3.2%. About half of it is efficiency. Right? So we've steadily demonstrated our ability to drive at least 1 to 2% EBITDA growth with efficiency. This time is not going to be different.
I mean, since you mentioned a low bar, we're actually improving B2B against a not too bad bar, right? Because we did grow in B2B in Germany. We grew not only revenues, but also profitability. And for many years, this was actually a differentiator when you compare it to our peer group. So we want to get better than that going forward. Tomorrow there's the B2B session, so we can also dive a bit deeper into this. So next question I take from Steve, please.
Yeah, thanks very much. Just a couple kind of following up really from Andrew's questions. Understandably, you didn't talk much about the economy. Read headlines, the German economy is not in great shape at the moment. So, when you look out for the next 3 years, is your guidance kind of in any imaginable economic scenario, give or take sort of 2 or 3 points of GDP growth? Are you assuming that unemployment stays broadly the same, kind of 6% where it's been for the last 7 or 8 years? So that's just, and how do you accelerate B2B growth in a worse economy? And then secondly, just on the competitive landscape, your undoubted success is obviously, reflected in the lack of success of your competitors. I mean, do you ever worry at all that they're sort of, they're doing so badly? I mean, I think Vodafone's going to see service revenue declines of 5 or 6% this quarter. That will at some point invite a response. That your aims of getting more than 40% broadband share is great, but that doesn't leave much for everyone else. So just interested in your thinking around that and how do you kind of get the balance right, or does it not even bother you?
So, look, let me deal with the economy one first. Look, the way we've looked at these scenarios is pretty much a continuation of the current economic climate. I'll give you a couple of places. In general, as an industry, I think we've been reasonably resilient to recessions and changes in the economic conditions. But does it have an impact? It does. On some pieces, like broadband growth, right? Volume growth. What lands up happening in a tighter economy is significantly less household formation. You look at household formation 2016 to 2020 in Germany, it was 3.5% a year. Projected household formation going forward is 0.5% a year, right? It's just too expensive for kids to move out of home, and I should know, right? But it just makes life significantly harder for people, and that slows down things like broadband growth. Right? Now, is that built in? Yes, that's built in on the volume growth side of what we're talking about. But as an industry as a whole, we're not hugely subject to it. B2B, for example, survived the entire Corona crisis, which was a much more brutal impact on especially small businesses, fairly well from a telco perspective. Competitive landscape, look, I think what we've tried to do very hard is stick to our principles of being driven by insight and being driven by underrepresented segments. Now, we've had an environment for a while, for example, in broadband, where some of our competitors had 1 gig for 40 euros. Right? Now, we've stayed very focused on what makes sense from a consumer perspective, and a lot of our growth plans, that's why we've been paid to highlight things like TV, where we have 12% share, where we have an underrepresented segment. Or the point Wolfgang made, which is, we're sitting at 27% penetration of our second and third SIMs. How do we drive that far harder? So a lot of our growth thinking has been based on how do we shelter ourselves from whatever happens in the competitive environment, right? And that's what this plan is based on.
Okay, next question is from Usman, please.
Hi, thank you. Usman from Berenberg. Got 2 questions, please. The first one was just on this recent press about this dispute with Meta on fair share, etc. And you seem to be adopting a more aggressive stance towards this whole debate. Would be interested to hear how this affects your customers, whether you see any resolution, whether this is setting a precedent for issues in other markets. That's one question. The other one was, I guess I wanted to make this a bit broader. I mean, from the first session and then now, it's pretty clear that as a group, you do not want to be seen as an incumbent. You don't see yourselves as an incumbent. I guess the issue that creates is, and I guess we can see this in Germany the most, is that you're not only not prepared to lose market share, you actually want to gain market share, and you're getting well above your market share in a market that you're yourself saying is becoming saturated with the volume growth slowing down. You're deploying a network equipment that doubles your capacity, but that's not unique to you. Your competitors are, have access to the same equipment as well. So at what point do you say this is too much market share. We need to give some space to others. Thank you.
So here's the way I think of it, right? Look, I fundamentally respect market structure. I think it's the most powerful force that shapes our industry. Right? That's a given in my mind. Now, that said, the way I'd like to think about this is not at what point do I start giving up market share. It is because that's a very average view of the world, right? I would rather say at what point do I believe there aren't underrepresented segments? At what point do I believe that I do not have anything unique from an insight perspective to create share without it being based on a price-volume relationship? To me, market structure starts getting really impacted when you start saying, I will start using something to start playing a pure price-volume relationship. As long as I can find opportunities like TV with 12% market share, or I can find a segment like Kongstar, or the family plan, I would argue what we've done with family plan improves market structure. Because what it does is it hurts the MVNOs most. I would also argue what we've done with family plan increases market ARPU because people upgraded from a much cheaper plan to a more expensive, albeit cheaper than normal, telecom plan. So look, I completely believe in market structure as the most powerful force, but I think it's too simplistic to land up doing a linear read from respecting market structure to say, therefore, to use that phrase again, incumbents must decline, right? It is just too simplistic. I would totally agree with you. If I was rushing out there tomorrow and saying, I have more capacity, I'm going to drop price, and then we'll see who responds, that's just dumb. And we don't do dumb things, right? We are very thoughtful about making sure that market structure gets respected as we drive. But we will not ignore underrepresented segments or insights that we believe genuinely help us grow differentially. So I'll answer the question of when we start losing share, rather as when do I start running out of insights and when do I start running out of underrepresented segments. On the dispute with Meta, I think Tim has eloquently argued our position a few times on fair share. Now let me separate two things here. One, we completely believe that we need a fair share in terms of network contribution, because you look at the amount of traffic that's coming in, that's a pure violation of the historic Tier 1 agreements, which was based on balanced traffic, if you'll have it, symmetric traffic rather than asymmetric traffic. The Meta dispute itself is a bit more nuanced than that. We actually won a court ruling went in our favor in Cologne, which allowed us to charge for peering. Right? So and I don't think we're adopting an aggressive stance here. We're simply adopting a stance consistent with what the court ruling told us, which is we can charge for peering.
Okay, thank you, Srini. And next is James at Newstreet.
Yes, hi Srini. Thank you for taking the question. So I had two questions, please, and I'd love to just dig in a bit more on your German fiber build-out plan. So I think at the beginning of this year, you said about 60 to 70% of the homes that you had passed were MDUs. And what I'd love to understand is therefore of the future targets you are giving, the 17.5 million by 2027, what would be the mix between MDUs and SDUs? And then within that, how many of those would actually be marketable? Because my understanding is for a lot of the MDUs, it's harder to get in to do the level 4 wiring. And then the second area was focused more on the SDUs, because I think there are about 7 to 8 million premises in Germany that have been built out by other fiber challengers. And I think at the moment your overbuild with them is close to zero. Is it the intention in the plan that overbuild still remains close to zero? And therefore, if that's the scenario, do you see an outcome where you could potentially become a wholesale customer on any of these fiber challenger networks? Thank you.
Thanks, James. I read with interest both your pieces on MDUs, but so let me respond to the first one. Look, it's about 60% of the population, 55% of the population of Germany lives in MDUs. We will build across Germany, therefore, in any period, it will roughly be in that. We will build in line with the German population because that's what we're planning to do. I would like to debate, and maybe we can do this over dinner, the assumption that somehow any 4 is undoable in an MDU. Just to give you a sense, when you look at it at a cohort basis, which is the only sensible way to look at it, when we started, we got 60% of MDU permissions in 4 years. Right now, with the stuff Wolfgang and the team are doing, we get 60% of MDU permissions to build within 2 years, which is part of this 5 million build, right? So that's why the utilization piece, if you sum all of this up, you try and triangulate it back, we can't get to 1 million net adds if we're not confident that we will connect and build these households. On the separate question, I don't particularly plan to be a whole buyer for a bunch of private equity funded networks. Whether we will overbuild or not will depend on the economics of the specific area. Let's face it, people like Deutsche Glasfaser, you look at a vertical view of their penetration, they're getting to 28%. Now that's still, in quite a lot of those areas, means there are 70% of my customers there. And in a lot of those areas, that's still viable to build. I wouldn't call that overbuild, I would call that serving my customers.
Good, we have time for one short question, or one question, let's say. Short is also good. Adam?
Thank you, I'll try and be quick. Can you tell me why people don't take DT at the moment? Are there areas where there's a mismatch between perception and reality from your perspective? Thanks.
Is that on mobile or is that on fixed line?
I was thinking, I was thinking across the consumer portfolio, basically.
No, it's good. Look, I think like any brand, right? When you try and stretch the brand a bit too far, you will naturally get into segments that it doesn't work at, right? That plus the fact that a pure price shopper is hard. Right now, it's one of the reasons why, if you look at mobile, right, which is a more fragmented and segmented market, we have had more of a multi-brand approach to mobile. It's because there are some segments which don't want to take DT, either because of a perception on price or because it lands up catering to a very different segment, which is why you have things like Kongstar, which work really well. One of the reasons we're taking Kongstar into fixed is as we think about scaling, there will be such similar segments we think opening up in fixed as well. So there is an element of our strategy, which is multi-brand, but I want to be true to this. The heart of this company, the heart of who we are is still Magenta. That will still be the lead brand. That will still be everything we drive, right? We will then flank ourselves with the multi-brands.
Excellent. Thank you, Srini. Thank you, Wolfgang. Well done. And with that, we get on to our next session. Somehow fallen off my. Okay, to our next session, and